I've been told I'm pessimistic, but I've been bullish on gold and silver since, well, most of my entire life. But for this cycle, since 2001, when I was looking to sell blood or have a garage sale or anything to buy some. And Doug Casey was telling me, if I could call your broker and have him buy for you, I would. But people think I'm pessimistic. I hope I'm actually just cautiously optimistic and realistic. But at any rate, yes, if you've got a gold mine that's in production now, that mine was modeled on sub $2,000 gold. So gold could drop 50% from here, and it would still be gushing cash, or it should, unless you're a really crappy miner, right? And silver, again, a 50% drop from $100 still leaves us at nominal all-time highs. I mean, you would have to be the worst silver miner in the world not to make money at those prices after such massive, crashes. This has changed radically just over the last couple of weeks. My view has been for some time that gold and silver, it would be perfectly normal for them to correct and consolidate before going higher. I'm not a technical analyst. I'm very much a fundamentalist. We talked about central bank buying, but it's much more than that. I mean, we've got hot wars in the world, and despite everything, Ukraine is still not resolved. And sorry, Trump fans, but with Trump saying that we need it is sufficient justification to take Greenland by force, even though he's backed off now, making that argument gives Putin the argument to say, well, we need Ukraine. Or more alarmingly, gives Emperor Xi the argument to say we need Taiwan. So it's a pretty scary world out there on the geopolitical sense. We've got the central bank buying. I also think we have rotation into the gold space. It's not just momentum chasing. I think what we've seen over the last couple of years is actually institutions, deep-pocketed individual investors, family offices, that sort of thing, correcting that thing that Rick Rule likes to point out about that allocation only being 0.5% when historically it's been 2% to gold. I think we're seeing that happen now, where people are starting to say, hey, I need some. So for all of these reasons and more that we can think of, particularly on silver, which actually has industrial tailwinds, my view has been that we consolidate for a while and then go higher, like maybe 2020. We consolidated for 3 years after gold first went up over 2000 in 2020 before going higher. I think that would be healthy. I think that would set us up for a longer and higher bull run. But I got to say, it's hard to look at those charts just screaming north. I mean, silver in particular, that looks like 1979. You can be as bullish as you want, but beware if you ignore a signal like that. So I honestly don't know right now. I would like to think that we'll consolidate before heading higher, but Mr. Market doesn't care what I want. I think there's a very significant danger that we are in that blow off top phase now. And the fact that, maybe not at this conference, but online on social media, at least, that people scream at me, they hate me for even saying that, that suggests something of a mania there too.
The geopolitical backdrop is growing darker, not calmer. Conflicts in Eastern Europe remain unresolved, tensions around Taiwan persist, and global power dynamics are becoming more confrontational. Even rhetoric alone can reshape strategic thinking among major powers. In this environment, trust in global stability erodes quickly. That erosion matters. Historically, when uncertainty compounds across regions, investors and governments seek neutral assets. Gold and silver benefit not because of fear alone, but because they exist outside political systems. This is not a short-term panic trade. It reflects a broader reassessment of geopolitical risk.
It's just not sustainable. Either scenario, you can't go like that forever. I mean, at that rate, a couple of weeks would have taken us to 10 grand and over 200 in silver, which would be very hard not to argue or hard to dismiss toppy arguments at that point. Sorry I interrupted, but just I'm agreeing with you. That is not sustainable. No price can go vertical for too long. I've been told I'm pessimistic, but I've been bullish on gold and silver since, well, most of my entire life. But for this cycle, since 2001, when I was looking to sell blood or have a garage sale or anything to buy some. And Doug Casey was telling me, if I could call your broker and have him buy for you, I would. But people think I'm pessimistic. I hope I'm actually just cautiously optimistic and realistic. But at any rate, yes, if you've got a gold mine that's in production now, that mine was modeled on sub $2,000 gold. So gold could drop 50% from here, and it would still be gushing cash, or it should, unless you're a really crappy miner, right? And silver, again, a 50% drop from $100 still leaves us at nominal all-time highs. I mean, you would have to be the worst silver miner in the world not to make money at those prices after such massive, crashes.
What's different this cycle is who's buying. This isn't retail momentum chasing headlines. Large pools of capital, family offices, institutions, long-term allocators are correcting years of underexposure to precious metals. Historically, gold allocations averaged closer to 2%. In recent decades, that figure fell below 1%. That gap is now closing. Silver adds another dimension: industrial demand from energy, electrification, and technology. This combination of monetary and industrial demand creates structural support beneath prices, even if volatility increases. The rotation into metals appears deliberate, not speculative.
In the metals. So that's true. And if you look at them, if you look at the companies valued based on the commodities they produce, which, may not be as realistic for coffee beans or pork bellies or something, but particularly for gold and silver, which are money, it is rational to value them in that kind of money. So we get that. Industry insiders get that. Certainly gold and silver bugs get that. But I got to tell you, the generalist investor does not get that. So if gold and silver, never mind 50% crashes, let's just say they go in official, correction, bear market territory, 20% drawdown. The stocks are not going to hold up. I mean, you and I know that they're going to report a blowout quarter for Q4 25 anyway, but markets are forward looking. You could say, oh, well, they'll dismiss that because they're forward looking. But, even if we get a 20% drawdown, they're still going to report blowout quarters for this quarter and, going forward. We know that, but I'm not one for making big predictions. I would be exceedingly surprised if we did not see the stocks just get pounded on that basis. And by the way, as a person who's taken profits on the way up and has cash in his account ready to deploy, I would see that as a buying opportunity. I'm not saying, I want bad things to happen to anybody, but I'm saying if the market sells off and the stocks oversell, then that is the market giving us a gift. Anybody who's prepared for that should be able to set themselves up for the next big wins.
Still, markets can move too far, too fast. Silver's recent behavior resembles late-stage rallies seen in past cycles, where enthusiasm overwhelms restraint. No asset moves vertically forever. Even the strongest bull markets require pauses. The danger now isn't a fundamental breakdown, it's excess. When dissenting views trigger hostility rather than debate, that's often a sign emotions are running hot. Whether consolidation comes soon or later is unknowable. What history teaches is simple. Ignoring extreme signals rarely ends well, even when the long-term thesis remains intact.
Well, so I just want to emphasize, because people get mad at me. They hear anything other than what they want to hear, and they assume I'm, Darth Silver or Satan incarnate or whatever, and I hate everything good in the world. I'm not articulating a bear case, and I agree that these stocks are objectively undervalued based on the, extreme valuations of the commodities, even if they correct. But I'm just an old wolf who's been in the market for a while, and Mr. Market is not rational. He overbuys and oversells all the time, which is actually a good thing for disciplined contrarians. That's what creates opportunities for speculators. So I'm not articulating a bear case here for the metals or the miners. I'm just saying, Mr. Market being as bipolar as he is, experience suggests that, a wobble here can create a truly, not to beat it to death, but a great buying opportunity is worth taking advantage of. Pull back to the big picture. And that says two things to me. It didn't matter which Kevin got nominated. The only way you got into that chair was by promising Trump maybe your firstborn signed over in blood or something. I don't know what the deal was behind closed doors, but you have to do whatever Trump wants you to do. He's clearly learned his lesson from Trump 1.0 and is only appointing yes men or women this time around. So it really didn't matter who got nominated. Right now, the market's reacting sort of with maybe some muscle memory that this particular Kevin was seen as hawkish before. But, I just think there's no chance. Maybe I'll be proven wrong. Maybe he lied to Trump and he got in there and he'll do the right thing. But I expect to get a Fed chair pushing for looser policy, maybe a divided Fed, which could actually be a good thing longer term. But much ado, maybe not about nothing, but much ado about something that's already priced in, I think. So big overreaction in the markets. The other sort of larger picture, there's a lot of things going on in the world that we can talk about, but which Kevin gets in isn't going to make any difference to whether China's going to keep buying gold or not, or India, or Russia, or other places. We've got the Germans even recently saying, we still want our gold back from New York. Could we have it, pretty please? Like, none of this theater emanating from Washington at the moment changes what's already been done, what's already been set in motion, what's going on in the world. Who knows? By the time we post this, there could be bombs dropping in Iran.
Here's the paradox. Even a sharp pullback wouldn't invalidate the bull case. Many producing gold and silver mines were built assuming far lower prices. Their margins remain robust even under severe corrections. But equity markets are forward-looking and emotional. A 20% decline in metal prices could still crush mining stocks temporarily, regardless of strong cash flow. For disciplined investors with liquidity, that's not a disaster, it's a gift. Oversold conditions create asymmetric opportunities. Volatility doesn't destroy value, it redistributes it from the impatient to the prepared.
Rock meet hard place. I mean, just look at Japan. For a long time, Japan was held up as an example of, see, look, you can run ridiculous debt. It doesn't matter. Aside from the fact that Japan has a highly homogenous culture with, a large savings rate and a lot of other things going for it that gave it more runway to try an unsustainable policy. But they've now run into that wall themselves, and they are also caught between a rock and a hard place with higher, they finally got inflation and now they can't control it. But if they do, what does that do to their economy? At the end of the day, reality matters. For whatever it's worth, clearly it was very positive, $5,000 gold plus $100 plus silver. How could it not be? A lot of high-fiving and smiles and that sort of thing. But it was interesting to me that it was not as ridiculously frothy as I've seen it before. At the peak in 2011, not only did people follow me around, which they did this time, and I had standing room only and people spilling out in the hallway for my talk and that sort of thing. But last time, people followed me into the bathroom to ask me for stock picks or to evaluate their portfolio. Doug Casey and I used to call this the bathroom index. How many people follow you into the bathroom tells you how frothy the market is. And I must say, nobody followed me into the bathroom this time. Maybe I've spoiled it by saying it on interviews and nobody will do it now. But that, for whatever it's worth, it didn't happen. So it felt clearly very positive, but it didn't feel crazy to me.
Despite record prices, sentiment hasn't reached the frenzy seen in past peaks. Conversations are intense, but not irrationally euphoric. Even respected insiders publicly taking profits hasn't triggered outrage, something that would be unthinkable in a true mania. Meanwhile, global forces continue moving in one direction: rising debt burdens, strained monetary policy, and central banks steadily diversifying away from fiat exposure. None of that depends on who sits in Washington or how markets react in the short term. The big picture remains intact. The path there, however, will not be smooth.
Yes, but it seemed more irrational. And well, let's put it this way. Rick Rule had 1,000 people speaking, and he told people he sold 80% of his physical silver. Not just any old thing, but as enthusiastic as gold bugs are, silver bugs are over the top, right? He said he sold 80% of his physical silver, which, I never touch, ups and downs or whatever. I'm always accumulating my bullion. Of course, I don't put as much as he does. And I suppose if that was a trade, it makes sense. He bought hate at a given time, and it has delivered for him. So he took some profits. And you would have thought that there would have been moaning and the hairy eyeball and people making gestures and just walking out on him, but they didn't. So I'm not saying they loved it. And I saw a lot of hate for similar comments he's made on YouTube and other social media. But the audience sat there and listened to that. And I think that tells you that, we're not in that uber frothy phase. When people can't even hear the words take profits without wanting to throw eggs and worse at you, that's when you know that you're really in that manic phase.